Hello, I'm Shelley Pritchard, President and CEO of the Wichita Community Foundation. Get ready for a dynamic presentation from James Chung from Reach Advisors. The Community Foundation has engaged James and his team in a multi-year deep dive process. This process is data-driven, economics-based, and non-political. Your call to action will be to identify projects that you can work on as an individual, in your corporation, or organization to be a part of this entire project. Visit the website wichitacf.org for links to related articles and next steps as this process unfolds over the next few years. Thank you for the role that you will play as we focus forward for Wichita and our community.
Thanks for coming out at the end of the day today. Glad we have a chance to do this with this group, as we have a lot of issues that we've been going through in what we call sort of our diagnostic phase, as the first phase of diving into what's happening in Wichita and what opportunities are there for Wichita as we look forward. And as you'll see in this presentation, this group that was the core of this group, there's a reason why this group was assembled for this. It's pretty critical to what's happening here. So we are going through this basically as this first step, just trying to understand what is really going on and trying to end up pulling together sort of data and insights onto what is Wichita's current situation, what is it that has fed the situation that we're in now. And I thought that one of the interesting ways to look at this would be just to look at it from maybe a little bit of a personal historical perspective. And my story in Wichita started in kindergarten. My father got his first teaching position at Wichita State University. We ended up buying this modest, our first home, modest 1,400 square foot home in, what I thought was, what I was concerned when I came back to Wichita was, oh boy, what's left? Is it, how's the state of the Wichita economy? Is it, I was expecting to see something sort of run down, but I just had to go see where, that place where I grew up from kindergarten to third grade. And it was sort of a remarkable sight. Everyone was out in their yards fixing up their homes, kids playing together, kids of all races. It was just sort of like a really beautiful community I wasn't expecting to see. I could see, I stopped to chat with the guy who owns that home now. A guy's a truck driver who's proud about sending his kid off to college. And I was saying, it's the same thing happening again that happened to us. It's a place where families can end up, setting roots and building better lives for their families. And it's still happening. And that was really encouraging to see. Kindergarten to third grade, I spent at Buckner Elementary School, which is sort of now it's a magnet school, but at the time, as you probably know, given its location, it wasn't necessarily, well, it was one of the schools with lower, with students of lower socioeconomic status. It was given its location. Yet at the same time, I got off to a fantastic start there. Teachers who let me go as far as I could, encouraging about that. And I hope that same kind of opportunity still exists for students today. Regardless of where they live, regardless of what school they might be in. I hope that other students can have that same kind of start that I had at Buckner Elementary. Fourth grade, one of the great things about that happened was, as I found out, my father, a hardworking man, they invested okay. We moved up to a much larger house, and it was a fantastic place. And basically, what I looked back and realized was, in a lot of ways, Wichita was the embodiment of the American dream. For my parents, the immigrants, who were able to end up, we lived in the, great place, great neighborhood, great schools. Had the chance to enter what is now Coleman Middle School, where I had a chance to study under a math teacher who pushed me so hard and changed my educational trajectory. Once again, I hope it's a kind of environment that students have some kind of that kind of fantastic accelerating experience in some way or another, regardless of where they live, regardless of what school that they're in. When I realized I was probably running out a little bit of headroom, I switched, and fortunately, as a city large enough where there was a really strong college preparatory school, and I had that opportunity as well too. It was a fantastic place to grow up, absolutely, utterly fantastic. Went off to college, and and unlike a number of my peers who came from cities like Wichita, I decided I wanted to come back here. And so I was looking at opportunities, and fortunately I hooked up with a company formerly known as Knight Ridder. And while I did that both after college and after business school, and while all my peers were fighting to get to like the Miami Herald and San Jose Mercury News, I got my dream posting back home at the Wichita Eagle. So I had a chance to come back and experience Wichita as a young adult as well too, in early formative parts of my career. And so I had a wonderfully positive experience growing up in Wichita. And some people they're sort of surprised. I grew up in Wichita. They weren't expecting that. But I recall a fantastic Wichita, fantastic for my family, fantastic for myself, a fantastic city. And then what I didn't really fully realize until we started digging the data was there might have been some basis for that feeling. When I think about Wichita, so I grew up in Wichita from like 1971 into the mid-'80s, came back in the late 80s. So as I think about Wichita in 1980, what was Wichita in 1980? Economically, pretty significantly higher household income than the rest of the U.S., 8.4% higher. Better educated. 15% more college grads than there were elsewhere in the country. Productivity, higher productivity than the rest of the country. There was something to that. It really was sort of a remarkable place. It was a place that was, doing more. Basically, it was out delivering its size. And that was the environment I grew up in, an environment that I recall, an environment that really helped shape me and foster me, pushed me, into what I ended up doing later in life. But there was a fantastic Wichita that I recall, and that's why I realize now that's part of probably what's fueling some of the sentiment I have about Wichita today. But there's a big question that's been floating around town, and part of what's feeding this process, and that is Wichita strong, stable, stagnant? And I've certainly heard from my interviews and questions, there are a lot of differing opinions on that. And so what we wanted to do here is to start to address that. First off, when Wichita Community Foundation approached us, they asked us to do a community indicators project, a community measures project. And it's something that a lot of cities do. Like here's one for another mid-sized city, where they basically try to identify measures that can track progress. And so we told Carol, who was there at the time, that it's interesting. I'm glad you're doing it. Would be happy to help and provide assistance to whoever does it. And she said, well, we want you to do it. And I said, well, here's the reason why we said this wasn't what we would do, and that is that the challenge with most of these community indicators projects, they're very well-meaning efforts to try to track progress, but most of them end up measuring factors over which the community has no control, or they measure indicators with little impact on outcomes, or they measure byproducts rather than drivers, or they're just lagging indicators versus predictive measures. And that's sort of more the ballgame we play in, is try to figure out what are the things that shape how things turn out, what are the things that you can end up identifying or levers, how can you end up facilitating change, finding predictive measures that can help facilitate change. And so addressing these issues, and and Carol said, well, that's sort of what we want. So we said, okay. So she said, so well, can you do this? And this gets a little bit closer to what we do. And so what we're doing here is a much deeper level of analysis to identify the most important measures of community growth or decline. But instead of this just being a community's measure, a project to create indicators, we're looking for a project to help the community drive towards positive outcomes. Our output is not going to be a report. Our output is, can we help be part of the process for the community to identify the most important issues, to be able to start to lead more directed action towards intended impact. And that's what we're trying to do here today, and that's what this first presentation is of the first phase, of the diagnostic phase, as we start to try to push and help be part of the process of having the community engage in the activities that drive positive outcomes rather than wait for things to be measured. So the process is a pretty thorough process. Some of it is just basically the qualitative work of just getting to understand issues, interviews with, I guess now it's 60 plus Wichita leaders and stakeholders, with many more to come in this process. Interviews with 11 leaders from comparative outperforming cities that are in similar situations but doing really well. More of those to come. Reviewed hundreds of academic and policy papers from all perspectives. And then various survey data of Wichita residents, and then we also had a lot of extreme quantitative analysis between our firm and the firm that I've spun out, where basically we've built direct pipelines to suck up all the microdata coming out of Census Bureau and Bureau of Labor Statistics, deconstructing it, meshing it to build much more granular data sets and build better time series data than what currently exists. Use a lot of machine learning to start to see patterns that humans would never be able to pick up from tons and tons of different sources. So basically we are a very data-driven firm, look at things with a very quantitative lens, and that's what we're trying to pull out. Is we're not going to bury you with everything that we looked at, but just pull out what are some of those main things that were most important. How do we end up boiling that down into things that the community can start to get their arms around and figure out, okay, these are things we need to do something about. So back to this question: is Wichita strong, stable, stagnant? So we talked about household income, where basically it used to be pretty significantly above the U.S. Now it's 4.3% below national median, which is, it's okay. It's not bad, except for the fact that's a 12% downward drop during that period of time. That's a significant drop in income. So that's one of the challenges that we have. As we look at household income growth, that was for the median, the midpoint. Now when we look at the mean, which is the mathematical average, mean income is 12%, not just 4%, but 12% below U.S. average. And when you look at higher income households, $150,000 plus, 42% fewer Wichitans have that level of income versus the rest of the country. Basically what we're seeing is that Wichita is simply not producing the same level of wealth as elsewhere. Or it's not producing the same level of wealth that Wichita used to be able to produce. And so that's one of the challenges. As we look at what's happened over time, as we said over here, basically the y-axis is personal income, x-axis is time. Wichita started off with a higher level of income, higher personal income. It was about 1984, which is about the time I left Wichita for the first, for school, where basically the edge started to close. 84 was basically sort of the economic peak for Wichita, and then started to close after that time. U.S. started to climb, but what's interesting is there are a couple points in time where not only did the U.S. succeed, there were 2 points in time where there was an acceleration of the decline. And so we're trying to pick apart what were the drivers out of the acceleration of the decline, but then Wichita didn't make it back up. The decline dropped further, and then it just sort of tracked, and then it declined further again. And that's sort of the cycle that we're seeing on multiple measures, is that there's these things that hit Wichita, and Wichita never fully recovers from them. And we see this time after time again. Now switching from income growth to population growth, which is something that we also track very carefully, is that Wichita is growing, but since the start of the decade, it's growing at half the rate as the rest of the U.S. So, population growth can be very productive in communities, but it's a slower growth city. And almost of Wichita's growth is what we call natural growth. It's basically, there are more births than deaths. So the people who are here have kids, and so that's the source of Wichita's population growth. But the real story is when you look at net migration, the number of people who come in versus the number of people who leave. And when we look at that period of time since the start of this decade, is Wichita is losing people. It's flat out it's flat out losing people. Compared to comp cities like Omaha is not losing people. Des Moines, which is slightly smaller than Wichita, is gaining a lot of people. Oklahoma City has been on a real tear. Austin, when things are really working, way up there. It's not that Austin is necessarily a comp city, except for the fact that Austin was the same size as Wichita in 1980. So as we look at net domestic migration, if you rank it among the 381 metropolitan areas in the U.S., it ranks 331. I mean, it's sort of at the bottom end of growth. So that's the challenge that we have is right now, is that we haven't really recovered out of that recession. This is something that we picked up in some prior work. We started comparing key economic measures to other comp cities. And I wouldn't worry so much about the actual numbers there, but the main point here is when we compare it to other comp cities, we see that Wichita is basically on the low end of every measure, except for college education. Oklahoma City is lower, but they started lower, and they're picking up while Wichita isn't. So, basically, by most measures, I can see why people say Wichita is sort of stable or growing, because, it's income, unemployment, educational attainment. It's not far off the national norm. Population hasn't declined. So on the surface level measures, okay, maybe it's stable. But in context, it's clearly losing ground compared to the rest of the U.S. It's clearly losing ground compared to the comp cities that have found a way to turn around. It's losing ground to the Wichita of the past. In our corporate work, we view this as, even though the numbers appear stable, it's a market share decline. Unfortunately, what we find is that we've only seen one case in everything we've tracked where a market share decline reverses on its own. And the only other way to make market share decline is figure out the interventions to make that change, because the forces are so powerful driving it. We'll go into the why behind that. So the why is, we end up going through the analysis and realize there were 4 fundamental challenges that are at the heart of what's explaining what's happening in Wichita. Number 1 is the business cycle challenge. Number 2 is the human capital challenge. Number 3 is the entrepreneurial challenge. Number 4 is the perception challenge, and we'll talk about each of these. So first off, taking the business challenge. As you probably know, Wichita is a place where the impact of recessions is that Wichita is slower to recover after recession. Wichita declines at a steeper rate during recessions, and Wichita still lags. Each cycle ends up coming through, hits Wichita harder. It takes longer to recover. When we start to get to the point where we can start to recover, and then something else hits. So each cycle ends up taking away more and more from Wichita at each time. When we look at gross regional product, basically the accumulation of goods that are produced in a city, the gross regional product growth rate in Wichita, we're in the bottom quarter of U.S. metro areas since the recession hit 2008. Basically, it's basically at the bottom end. It's really struggling to find its place for recovery. Wichita is finally back to pre-recession levels, except that's after accounting for inflation. And 2/3 of metros have caught up faster than Wichita. So it's definitely on the point where it's having tough time finding the right gear. To explain this a little bit further, we're going to dig into some financial portfolio tools, which if you're an active investor, you probably understand the concepts of alphas and betas, but I'll explain a little bit of that. But because of the data sets we're able to accumulate, we're able to start to go into some much more sort of extreme levels of analysis than is typically found. But I'll pull out some of the simpler charts that helped us get to understand what's happening in Wichita a little bit better. But these concepts can be simply described as alpha is basically the risk-adjusted outperformance compared to the norm or the benchmark. So in other words, if you're a mutual fund investor, you're hoping to find a fund where the fund manager is producing alpha. We're basically considering the risk that they're taking, that they're outperforming the rest of the market. And now we're applying that to cities, is what cities are able to deliver outperformance. Betas is the level of systematic risk or volatility compared to the norm. In other words, a low beta city is one that is fairly steady even amidst economic upturns and downturns. A high beta city is one that has wider swings than the rest of the U.S. economy. I'll skip the simple mathematical definition, but basically as an investor, your ideal investment has high alpha and in a lot of cases low beta, unless you're trading unless you're betting against cyclical factors. But so as we look at this, let's take a look at employment sectors. And what we see is that basically healthcare is high alpha. In other words, it's outperforming in job growth. Healthcare outperforms other categories in Kansas, and then which makes sense because as population is aging, there's more demand for services. Manufacturing has the lowest alpha. It's not a net job creator. In part, manufacturing has been suffering a long-term decline in the U.S. In part, it also can be explained by manufacturing is getting more productive and productive over time. It takes fewer bodies to produce a fuselage than it did 20 years ago. I mean, actually, or you could tell me plenty about that, I'm sure. But basically, Wichita is heavily invested, has one of the highest ratios of manufacturing, and what we find is that basically it's an industry that's harder and harder over time to crank out job growth or even maintain jobs. As we look at betas for Kansas employment sectors, basically healthcare is the only one that's actually countercyclical. In other words, people are less likely to get more sick or less sick depending on whether we're in an economic upturn or downturn. Manufacturing, you would expect, would have high beta because it's somewhat tied to business cycles. But the odd thing about Kansas is that the professional science and technical jobs and management jobs, which typically are lower volatility jobs in other places, they're higher volatility in Kansas, most likely because a lot of them are tied to manufacturing. So what we have is basically we're dependent on industries that are sort of low alpha, high beta. Now we did it to cities. And Wichita is a lower alpha city, basically not an outperformer. It performs a little bit under comps. Basically, we built about, there were 20 to 30 comp cities that were basically roughly, they had 2 or 3 things in common, roughly same size or roughly same industry structure or roughly same geography. And of this comp set, Wichita is lower alpha, so not an outperformer. These 2 cities I'm going to flag because they're going to keep coming up. By almost every economic measure we were looking at, Des Moines and Cedar Rapids were extreme high performers, typically the highest of the class in most of the measures we were looking at, which led us on a little bit of a chase to try to figure out what are they doing different. And so we'll talk further about those. As we look at employment growth, betas, as we can see, Wichita is one of the most cyclical cities in the country, or of this comp set. Grand Rapids is more cyclical. They're dependent on office furniture, which has been easier to be produced in other countries. So that's been explained that. Elkhart, Indiana, it's a good thing our main industry isn't recreational vehicles. But Wichita is a high beta, high cyclical city. Now, Wichita historically has been a high beta city. From its founding, there was basically not even a city here until Chisholm Trail came through, and then all of a sudden there was massive growth, real estate speculation. It was a city of national attention because of the growth that was that happened there. But what happened was, it was boom and bust, but it left something behind. Then you have Jake Mollendick discovering oil in El Dorado and pouring all his capital into this really cool new industry that was emerging in America. And brought in talent from Chicago, said, come to Wichita, I'll fund you. And then all of a sudden, I think there were, 17 aircraft companies on Douglas. There were boom and bust cycles. World War I left behind a lot of surplus planes, and there were people rushing to become pilots, and there were a lot of surplus planes and pilots. World War II, Wichita really geared up, building, trainers, the Stratofortress. Wichita was a boom town during World War II, and Wichita, quite frankly, saved the U.S. and saved Europe's butt, in World War II based on how much it cranked up. And then there was a bust after that, but each of those cycles left behind a bigger city. Stearman, fortunately a company that's come and gone sort of, but fortunately it still exists through various forms and still lives as Spirit Aerosystems today. An example where there have been booms and busts. There are companies that come in and gone that have had various forms of corporate ownership, but in the past it's left behind a bigger, stronger city at times. The problem is we're not just a high beta city, but we've also become a low alpha city. So no longer an outperformer where those booms were so high that it was super high performance. But now it's like high cyclicality and underperformance, which is not a great combination. In part because the down cycles now are just hitting Wichita deeper and longer, when it used to be that at least there was something left behind that gave it a platform for continued growth. Basically, we're in the midst of a 3-decade-long decline versus the U.S. norm. Each recession pulls Wichita behind just a little bit more each time. And that's sort of the current situation that we're in. Part of why Wichita hangs in there is that as you look at manufacturing in the U.S., the blue bar is the U.S., and what we see is, the green bar is the U.S. And we see since 1980, there's been a sharp decline in manufacturing employment in the U.S. Wichita is the blue bar. There's more manufacturing happening in Wichita, and it hasn't declined at quite the same amount. I mean, the good news is that basically, one of Wichita's core industries is an industry of very difficult products to manufacture and to replicate, and there's significant demand across the world for these things. And that's part of what's keeping Wichita in the game. That's part of what's helping Wichita defy gravity, given that structure. And we have a couple of massively successful global companies in some of America's strongest and highest demand industries. But despite the fact that those industries are performing well, I mean, when you think about commercial aviation, the backlogs have never been have never been bigger. The demand for those products have never been bigger. But why isn't Wichita growing amidst the industry growth? We're just not seeing that anymore. And this is probably the bigger question is, why have other mid-sized manufacturing-driven Midwestern cities, why have some been able to pull out and become the high alpha, low beta cities and become much more solid economies? Not all of them have, but some of them found paths. And that's what we want to explore deeper on this. What we found in looking at some of those cities, through all the economic analysis, we were able to identify the Des Moines and Cedar Rapids, and quite frankly, those two really were extreme outliers in almost everything. But of these cities that have done this, we've noticed that there's sort of a cycle that they've kicked into gear. It's not so much defined by an economic cycle, but a cycle of embarking on a constant cycle of active upgrading. That they decided that there was something that happened, people came together and realized that we can't just live the way we used to. We have to upgrade the city. And so a lot of it depended on building their manufacturing strength, basically to maintain really good, solid blue-collar jobs. But they became better at that. They also built their base of human capital that also helped them transform more effectively as the nation and the world economy evolves. They had built a base that was able to evolve beyond what they've been, a base that's been able to be more competitive and be able to respond to external shifts more aggressively. And so, as we take a look at this, there's something that we found when we looked at manufacturing specifically. What we saw with manufacturing is that there was this odd paradox that basically the cities that were most dependent on manufacturing or didn't have manufacturing had lower rates of college educational attainment today. Basically, it's not a good thing if you have zero manufacturing because there's a certain population base that will never be able to get a good job. And it also became a hindrance for cities that were way super heavily dependent on manufacturing. That was a problem too. That created constraints and dependence on the economy that was hard to break out of. The strongest comp metros today have created sort of a good balance. They've been able to maintain productive manufacturing. They've also been able to grow their non-manufacturing base at a far higher rate. They've been able to balance that more effectively. And that ends up feeding into question number two, beyond the business cycle issue. Issue number two on the human capital challenge, which we've come to realize is so core to what's happening here. And when we say human capital, the definition that we're working from is a measure of the body of knowledge and workforce attributes that allow the production of economic value. So it's not just how many people live in your city, but how well trained, skilled, educated, productive, those kinds of things. The challenge is, by most measures, we were seeing that Wichita's clearly challenged in retaining the significant amount of human capital that's been built up over time. Let's look at some of those measures. It's been really striking when we looked at that. So of human capital concerns, there are 5 that we want to put on the table to look at. 1 is the mystery of the shrinking labor force. 2 is educational attainment trends. 3 is where the job growth is in Wichita. 4, who's leaving. 5 is how does human capital actually matter? So the labor force, this one was sort of baffling to us when we saw it. Basically, what we see here is simply a chart, unemployment rate for Wichita versus the U.S. Don't worry about the details other than it generally tracks U.S. unemployment rates. But let's take a look at the size of the labor force. There's something really odd here. The labor force in the U.S. pretty much consistently grows. Wichita's the blue line. Wichita does not track that growth path. There are a couple points in time where all of a sudden the labor force just shrinks in Wichita. And it doesn't really fully catch up and recover. It's actually turning downwards right now. We're in a period of time where it's turning downwards. So in other words, we've got this human capital in here that Wichita has invested in to educate, to train, to bring to productivity. And then there are things that happen where it sort of evaporates. Whether some of them decide to just check out the labor force, or some of them decide, I'm just going to take my talent elsewhere, but there's a seepage of talent that happens that's out of the labor force that's been really baffling to us because we don't see this pattern in other cities. If we look at it, basically, if this were performing like most other cities, we're missing about 10,000 people at their peak earnings and spending years that Wichita should have out here. Just evaporates. It's about 6% of the expected population that age cohort. And one of our hypotheses behind this is that basically Wichita is challenged in deploying human capital effectively as other cities do that thrive on creative destruction. In other words, there's a business life cycle. Businesses get born, some succeed, some don't. Some succeed so well they get acquired, or they, so businesses come, businesses go. Industries come, industries shift over time. But among the high-performing cities, this creative destruction has been very productive. Basically, if there's talent that's on the market, they get reabsorbed into higher and more productive uses. It's not just human capital talent, but my God, there's or if there's space that comes available, there's a more capable entity that ends up in there that ends up producing more economic value. Versus Wichita has a lot of human capital that just evaporates, and we got millions of square feet of industrial space, that's going untapped in Wichita. But some cities have actually found creative destruction to be just a remarkable asset for them. That basically there's a churn of ideas, a churn of human capital, and it gets redeployed. There's something in Wichita, it's not getting redeployed. I mean, if anything, it's not creative destruction is a positive thing. Wichita is taking the brunt of creative destruction. So that's one of the things that's been the challenge here. Now, somewhat tied to that, educational attainment trends. Let's look at that. As we spoke, Wichita used to be better educated than the rest of the U.S. And educational attainment has grown significantly since 1980. But the rate of growth is about half in Wichita as it is elsewhere in the country. There's something where we used to have a significant advantage, but that advantage has basically disappeared because educational attainment is just not growing at anywhere near the same pace as what's happening in the rest of the U.S. Mid-sized metros, when we look at it, about 29% of Wichitans have a bachelor's degree. Let's take a look at other comp cities. Higher, even cities that aren't necessarily like college havens, like Cedar Rapids is super heavily manufacturing driven, is still higher, and we'll talk about that. Austin, when things are really happening, much higher than that. As we look at the job growth for the highly educated, here's one of the challenges. In 1993, Wichita employed about 55,000 individuals with college degrees. 10 years later, Wichita employed 56,000 individuals with college degrees. So in other words, there's basically been no growth, even though it's grown 6.3% across the U.S. There's been no growth of that. But there's been some job growth in Wichita. Where's it happening? And during that period of time, there have been 35,000 jobs out in the past decade in Wichita. But here's the problem. Half of them don't even require a high school degree. That's where the job growth is in Wichita. That's a problem. That's a challenge, is that we're not seeing the kind of growth that we want to see happening here. Now let's take a look at who's leaving Wichita. We were able to roll up 3 years of some census data, basically found that there are more households moving out than there are moving in. So going back to that slide on sort of the net migration. The average income, the higher income households are moving out, lower household incomes are moving in. Take a look at it on an aggregate basis. Basically, during that period of time, there's been about $150 million of income sort of sucked out of Wichita. And this is sort of the trend that we're seeing here, is that we're not seeing a positive trend. We're seeing fundamentally negative trends when we look beyond just the raw population growth, where there's some population growth in Wichita. When you peel back the layers, if it weren't for more people having kids, I mean, there would be no growth, and the progress is not happening. But here's another issue about sort of who will be leaving Wichita, where we can project that there are going to be some challenges. Basically, we're charting the number of people in the workforce by age category. 25 to 34, 35 to 44, 45, 54, 55 plus. Here's sort of the stunning thing, is that if we look to the end of this decade, which is not that far off, I mean, it's basically we're going to see the population of 55 plus workers grow by 40%. This age cohort is twice as large as any other age cohort in Wichita. We have a very aging workforce at the managerial level, on the manufacturing floor level. It's a very aging workforce, and so one of the challenges is that we've got, and this is to some extent the function of a low growth economy. We have a lot of people who are where there haven't been as many things open up to bring up leaders from younger generations. So we still have a lot of the same people in those jobs, but the problem is a lot of the human capital, intellectual capital, and knowledge in Wichita is in the hands of people who are going to be exiting the workforce in the next 5 or 10 years. So that's one question, is how do we start to fill that hole, given that we know and we can predict with pretty near certainty that this is going to be a major issue in Wichita. Or maybe we don't even have to fill the hole if there's no growth, which is the worst option. But we're going to have to think about what are the implications of that, because this is about as sharp, when we're looking at age cohort breakdowns, this is about as sharp as we see among most cities in the country. So now let's take a look at human capital. It doesn't even matter. Is it just sort of a theoretical construct, or is it something that really matters? So let's see how this plays out. When we look at whether human capital matters, every 1% increase in college educational attainment adds, well, based on our calculations, we're looking at between $200 and $400 to a city's median personal income. So a city with, what we see if we map it out against those cities with higher educational attainment, it's more likely to have higher incomes because of that. At first, when we were seeing other people do work around this, our first thought when we were seeing the academic papers was, well, it's probably just a function that the college educated follow the jobs. So it's not, this doesn't predict anything. It's not a driver. It's just a byproduct of, well, college educated go where the jobs are. But what we found was each 1% increase in college educational attainment raises wages. For college graduates, if you're in a city where college educational attainment increases, your income goes up too. Nothing happened to you except the city got better educated, your income goes up. But it goes up by even steeper amounts for those without college educations. And so this is why we've come around to this point where we realize, it sort of does matter. A better educated city does generate stronger pay for everyone. Because you have more people in the workforce who are able to create higher levels of value that benefits everyone in the workforce. So we've come around that because we're data driven, as much as I'd like to believe education matters. Believe me, if anyone really would want to believe that, it'd be me. But we want to see more evidence for it, and we're much more there now. And Wichita used to be on par in educational attainment, but while Wichita hasn't improved, other metros have leapfrogged Wichita, and it's showing up negatively in income growth, ability to redeploy assets and recovery, job creation, productivity growth, economic output, and let's take a look at examples of that. So let's take a look at human capital in terms of productivity growth, measured by gross regional product divided by per worker. U.S. has gone up 63%, which makes sense as U.S. has transitioned to a more knowledge-based economy, as college educational attainment has gone up. U.S.'s productivity has significantly jumped ahead of Wichita's productivity, which so that's one of the sort of warning signs here is that there's a price to this, is that we're just not gaining as much as the rest of the country. But there's one bar I'm going to add to this story. That's of Cedar Rapids, Iowa. Basically, Cedar Rapids is a manufacturing community that was absolutely stuck in the same rut Wichita was. Absolutely stuck. Cedar Rapids is an interesting community because it got to the point where there was only one local corporate headquarters left in the city. Everything else was acquired by outsiders. Plants started shutting down, and they realized this is just bad when all their, when their employees are all leaving town, and there's no one who cares. They're just sort of they're plants in the system that are being managed as a financial portfolio, and employers are leaving the town. So they decided that they needed to go out and talk to all those employers who left town, and what they kept hearing was, well, you're the most expensive plant which we operate. This is sort of a decision we had to make. And they realized there really was a challenge with that, and they had to figure out what they could do with that because they really were manufacturing dependent. What they realized, they had one core asset. And every city may have different core assets, but they had one in that they had this place called Kirkwood Community College inside town. And it's at the point now where they figured out, well, how can we get the educational system to work with employers more productively? It's at the point now, Cedar Rapids is a city of 160,000 people. Each year there are 40,000 residents enrolled in class at Kirkwood Community College. Sort of stunning. It's almost as if the cultural ethos of Cedar Rapids has changed where, what do you do for fun, leisure, and recreation? You go back to school. You learn new skills. You sharpen the saw. And look at what's happened to productivity numbers in Cedar Rapids since that point in time. Remarkable turnaround for a city that was that had every disadvantage going for it possible. So it's by the way, they told me the story. They still make a point of going to all of the corporate headquarters once a year because they know that the decision makers do not live there, work there, and they say they're told the same thing. They say they're told, you're the most expensive city in which we operate, but you're the most productive city in which we operate. And that's why almost all the manufacturing plants are centers for excellence for all the manufacturers there, where they say, those employers say, that's why we send all our people from all our other plants around the globe to go see what you're doing. And so that's how they hold on to them is, it's actually sort of good. They were able to maintain the mantle as the most expensive plant. That means the labor's getting paid pretty decently, but they're cranking out a lot more productivity around it, and there's no question about it. That is tied to building human capital. They figured out how to do that. Another way that human capital feeds innovation measured by patents. Wichita's the blue line, the bottom one. U.S. is green, or brown is the comp cities. Cities like Wichita. But it's a different story. It's just not. We're just not seeing the kind of innovation as measured by patents as we'd like to see. Here's probably the final thing on human capital I want to put on the table is that one of the biggest hidden impacts of the shrinking share of that higher value workforce is just strikes at the heart of what made Wichita Wichita. And what I've come to realize in this process is that basically Wichita is seeing fewer of the people who would be the entrepreneurs. And entrepreneurship no longer drives Wichita like it used to. And that leads to the entrepreneurial challenge that we'll discuss. Okay, so first off, as we think about Wichita, what Wichita is known for, it's entrepreneurialism. I mean, that's sort of the history. That's what Wichita is known for. But take a look at what's happening. If you look at startup density, per 100,000 residents for 366 metro areas, see where they rank. Our comp cities geographically are basically, top half. Wichita, bottom third. It's just not producing startups at the same rate. Look at Inc. 5000 companies, the fastest growing private companies. Again, indexing by population. You see that basically, that's where our comp cities are. When you're really on fire, that's where you are. And there's where Wichita is. It's the lowest once again. So it's any one of these data sets do not really matter, but we start to see the same pattern repeatedly that starts to confirm that yes, indeed, this probably is what's really happening here. Fortunately, well, at least we have one of those. We have one of those 5,000 companies here in Wichita. As we take a look at venture capital, venture capitalists have invested $48 billion in ventures in the U.S. Wichita didn't even show up on the list of the top 160 cities. I mean, we're the 51st largest city. That's the 80th largest metro area. We didn't even show up on the list of the top 160 cities for VC investments. These cities did. Kansas City's raking it in. I mean, culturally, they're really turning on to that venture capital, onto entrepreneurialism. Take a look at some of these other cities. They're doing it. Des Moines, again, smaller than Wichita. Based on population size, Wichita should be seeing $10 to $20 million of venture capital flow coming into Wichita to fund high potential enterprises. But it's seeing many years zero, and that's for the entrepreneurial city. So there's some mismatch there. Oh, by the way, I'll add that we looked at private equity flows too, which is a little bit harder to track because PE funds don't really lay out how much they invest unless they succeed. But based on our calculations, the last big private equity investment in Wichita was the $105 million that Onyx put into to launch Spirit Air Systems. Based on Wichita's size, Wichita should be seeing about $105 million a year put into a private equity investment in Wichita. Can you imagine if there's a bet on something that could be Spirit that drops into Wichita every year? Not all would succeed, but Wichita would be a really different place if it had stuff that capital flow could find. It'd be a dramatically different place. So, Wichita has one attractive factor for entrepreneurial growth, and that's low labor cost. But it's sort of missing the most important piece, and that is a shrinking share of the people most likely to fuel job growth. They're no longer here in the same concentration as we've seen in the past. Why is that population less prevalent in Wichita than the past? And that takes us to the fourth challenge, the perception challenge, but I'm going to lay it out a little bit differently than you might expect in this section. And that is that, let's take a look at what's happening in other cities. What Des Moines is heralding on their websites, number one wealthiest city in America, according to today's show. Number two best places for business and careers, Forbes. Fortune magazine, number one upcoming, downtown. It's just, it's best cities for young professionals, number one for Forbes. They've got a lot to be proud of. They've got a lot to trumpet, and it's sort of remarkable what Des Moines did. We end up calling them because we noticed they were just outperforming on economic indicators. And we asked, what's going on there? And they said, well, we realized that we sort of had to pull together and figure out what sort of made us special, distinctive. We realized that our real strong suit is that we've always been a fantastic place for families. And we wanted to make it a place where people wanted to come back to. We realized that we're probably not the hip place where the college grads would flock to, but we're the place where people want to raise their families, and so they're going to go away from Des Moines. They're going to leave, but after they've been trained by, they have good educations, go on to good state schools or elsewhere, end up working for the top companies in the U.S. or elsewhere. After they've developed that training, we want them back in Des Moines and applying what they do here. And so we want a place where people can come back and feel like it doesn't matter whether you're a one-income couple or two-income couple. It doesn't matter whether you want to live in, urban, suburban, rural. There'll be good schools and good corporate environment that'll allow you to stay at the top of your career and still live a life. And so they realized what's their sweet spot, what's their special stuff, really boring stuff, but it really matters to people. And they figured out how to exploit that to the point where one of the things that stunned us about the data was 70% of the managerial workforce is female. We have not seen that in any other city. But it's because, so I think what's happening is it's the kind of place, my hunch is it might not be so much that the men come back to Des Moines, but the women come back and bring their spouses. And so actually it'd be cool if we could prove that hypothesis. But we work across various industries, and I was talking to a group, the women's group of one of the big athletic footwear companies that you'd recognize the brand, and we're talking about the impact of educational attainment, how it's shifting things, and we started talking about, well, it's also playing in the scale of like cities and changing cities. And we discussed this phenomena about how there's a Midwestern city you would never guess and how it's really turned itself around and is just growing like mad. The economic measures are incredible. And one woman in the room says, oh, that's not Des Moines, is it? And I said, well, how would you know? And she said, well, I grew up in Des Moines and half my best friends have already moved back. and the other half are all talking about moving back. And so, I've started my discussion with my husband about should we be going back to Des Moines. I mean, can you imagine if that happened at Wichita? I mean, these people sitting in these, these global companies at apex, the absolute top jobs they could have, and the woman next to her was, dressed all in black, clearly from New York, and she said, "Wow, that place sounds really cool." I would never would have, that could be pretty cool. Maybe I should go there. I would never would expect to hear that from her. And then the EVP, who ran the women's division, said, "Man, if we weren't strapped to this company, this division should be based in Des Moines." And so, how can you make? I mean, it's remarkable what Des Moines has done to figure out. I mean, it's as geographically challenged as Wichita. It's smaller, so it's as challenged with air service. It's got all the same, a lot of the same challenges, but they've figured out a way to channel that really productively, where it absolutely shows in the economic indicators, no question whatsoever. Omaha, same thing. They've got number 7 best city for jobs with Forbes. Best city for millennials right now. A lot of 10 best cities for young entrepreneurs from Forbes. They've got a lot of good things going for it. Now they also have one big advantage, is that there was a class of city elders who parked their retirement money in one investment vehicle that did very, very well. And but the thing there is they've got the civic attitude where if you made your money here, you're going to spend it here. You're going to leave it here. And so it's the point where basically there's, the wealth that's made is expected to invest in other things. Then there's Wichita. And you look at the accolades, Wichita accolades, as they say on the website. Living in the air capital of the world by Movado, Wichita is the most populated city in Kansas. Okay? Number one city for first-time home buyers. Well, it's because the real estate market really, is not strong. Number 3 U.S. advanced industry hotspot from Brookings. Okay, that's a good one. Number 16 best city to start a business, except for the fact that all the indicators that we're measuring show it's not happening here. Number 1 least congested city in, okay, yeah, right, leave that. Number 9 for hardworking cities in 2014. According to sparefoot.com, Wichita residents are willing to work fairly long hours and are likely to hold more than one job. Okay, and top 50 cities and sunniest cities in the U.S. It's number 46. Okay, so, I know there is a lot more to Wichita than that is just not coming through, that is just not getting channeled in ways that some other cities have. And that's where we want to start to figure out, okay, so we're starting to identify the 4 core issues. Perception is absolutely one of them, but there's another perception issue. And that is that in a recent community survey, in some branding research that's happened in Wichita, the number 1 perceived attribute among residents was that people residing in Wichita are warm and friendly. And that's certainly the Wichita I knew growing up. I mean, remarkably, ridiculously warm and friendly to my family. I mean, in amazing ways. And so I sort of bought that. And then we discovered this data set, that the very little known data set from the U.S. Census Bureau, that we're sucking like everything that they have, that living in the bowels that no one has ever seen. And we're able to analyze 108 metro areas, the top 108 metro areas where the data was stable enough. And on factors of civic engagement, like talked with neighbors frequently, Wichita is 11th lowest out of 108 cities. Frequently do favors for neighbors, Wichita is 9th lowest out of 108 cities. See or hear from friends and family frequently, Wichita is lowest out of the 108 cities. And it's not like any one of those are important. The actual numbers are important, but there are multiple things that start to say, here's my guess is that among the peer sets, Wichita is a warm and friendly place. But when you escape your immediate peer set, it might not have that same level of warm and friendly. And we certainly heard an earful of that when we were involved in our in-depth interviews of people just putting stuff on the table about the overall environment. If that's what we're selling, that might not be what we're necessarily delivering, and we need to think about that. Now, probably the other factor that sort of concerned me is we noticed there were 4 cities hanging towards the bottom of these various metrics. There was San Bernardino, California, which was declared bankruptcy. And then there was Reno and Las Vegas, Nevada, which Okay, they've long declared moral bankruptcy. But, basically, it's not necessarily the comp set that Wichita should be in. Wichita is a lot better than that. But that's where it was sitting. And so that's why I would say, there's a serious perception issue to start to think about. And the good news is when we presented this to a board of an earlier group, people started to come up with ideas thinking, you know what, as I think about it, my neighborhood, I know people, but there's new people have moved in. Never really got to know them, and they probably get to know people through their work, school, and church. But there are these high-flying people coming in, but they're probably not really engaging that with the community, getting to know how good the community is, engaging with the city. How can we do something like? Can we reinvent Welcome Wagon? Can we do That's where we want to start thinking is, what are all the little things we can do to start chipping away some of these structural issues that are holding Wichita back? Now, this is something else. The Knight Foundation ran a survey of all the 26 cities in which they operate, where Knight Ridder newspapers used to run. Here's what they found is, in social offerings, Wichita residents caring about each other remains the lowest rated area. They found exactly what we found. They said, in openness, the community continues to see young talent as the least welcome group. Currently, the young talent group is on par with gays and lesbians as being perceived as the least welcome group. That's a little bit concerning when that's sort of when the community and the young talent is viewing themselves as least welcome. We got a lot of human capital issues. We're going to have to replace a lot of aging talent. We're going to have to find fresh blood in here who can revitalize the city. We got to find people who are going to buy the houses of people who are moving out. We got to find people who are going to be able to create an environment where ventures can start and they know there's human capital here to amass to be able to grow these things. But we're seeing from multiple data sets that something is not working in Wichita right now. So what we end up with, there is a real perception challenge, internal and external. There's a real structural challenge as well, too. And it's challenged every single mid-sized manufacturing city in America. This is not a Wichita issue. There are about 100 cities across the country where this happens. For part of the year I live in one of them, and up in northern New York. It's a common issue. But some pull out and prosper. And so the question is, as we move from this sort of first initial set of diagnostics, here's what we're going to put on the table. We'll be with this. We'll be sticking with this for the next 2 years to try to drill deeper, understand better, figure out root causes better, figure out what are the levers. But we're starting to see enough patterns here where we fundamentally know what the issues are. Got 4 core issues. And we know those have to be tackled, and they can't wait for that one magic solution. They can't wait for that one organization to all of a sudden figure it out. It's going to take the community to figure this out. And that's a process we want to start today is, basically, is this an insurmountable challenge? Absolutely not. What I know about Wichita is, we've got this community of incredibly caring people. We got this community with this incredible, it's got entrepreneurial DNA, even though it might be dormant this generation, but, somewhere it's there. We got a community that knows how to build stuff. We know we have some pieces to make this work. I know it, I've seen it, and I think there are assets here to do this. So I don't think this is a lost cause, but it's not going to be easy. Other cities have certainly turned the corner. Not all of them. A lot of them have been stuck. A lot of them, some of them are in the Wichita situation, but some have figured out to say, well, you know what? It doesn't have to be this way. We're going to change this. Unfortunately, for most of those we called, it took a crisis to pull the city together. Bombing in Oklahoma City, flooding of downtown, tornado wiping out a good stretch of downtown. Unfortunately, that's one of the common factors among the high turnaround cities. So the question is, can Wichita pull together before an unexpected crisis? I want Wichita to turn around, but I don't want it to be a disaster that forces that situation. And the other issue is just waiting for reversal, assuming this is cyclical, it'll come back around, waiting for reversal, based on knowing what we know about sort of our predictive analytics work, it's not going to reverse itself just automatically. It's going to take directed action. Unfortunately, there's no one single bullet to pursue. It's not going to be one organization that just decides we're going to do this and it's done. But everywhere we turn, we've been meeting city leaders, citizens who say, you know, this city matters to me. These issues matter, and I'm willing to step up and build a better Wichita. I'm willing to do some heavy lifting. And what we're trying to do is basically, can we get a critical mass of people to start to say, you know what, it's Wichita's turn now. Can we get a critical mass to start coming up with the ideas to say, you know, we're going to tackle a piece of this. There's no one thing that's going to address the 4 core challenges, but can we start chipping away at pieces of all 4? Number 1, again, the business cycle challenge. You know, so on that, you know, how can we end up cultivating businesses that have higher alpha, you know, that can end up balancing the Wichita economy? You know, how can we cultivate, foster those kinds of things? 2, the human capital. How can we end up developing better talent, attracting better talent, retaining better talent, replacing the talent that's going to leave? How can we do that more effectively? 3, the entrepreneurship challenge. A whale of a challenge. This was a massive engine for Wichita in the past, and there's no reason it can't be. But you know, Wichita's just lost that mojo, and you know, I think that a lot of it is that it's you know, and to some extent tied to the perception challenge. You know, how can we start to have more open discussions about, you know, hey, you know, there's some issues in Wichita. Some of it, it's always going to be, you know, a mid-sized city. You can't change that. But as the folks at Des Moines told me, they say, look, you know, just got to understand, here in Des Moines, we fight above our weight class. You know, so we got that issue, but we also have some other issues about sort of environmental, like the friendliness issue sort of stunned me when I saw that. You know, it's like I was talking with my mom about that when I called my mom. You know, I was going to Wichita. I'm going to Wichita, and then she said, "Why are you going to Wichita?" I told her what I was doing, and I said, "Mom, you know, this was really stunning what I saw about sort of this friendliness factor in Wichita." And my mom says, "You know what? You have to tell them to be like Wichita used to be, because it was like, you know, everyone was so incredibly friendly, you know, to us when we came in here. I mean, you know, my parents, you know, I mean, you know, they weren't totally fluent in English when they came here, and it's like she just started reeling off family name after family name after family name that just just was remarkable. And she said, you know, just, you know, Wichita just needs to remember that's what Wichita is. But you know, so there are a lot of issues. There's no one thing that'll fix all of them, but they're all intertwined. And there actions that people can start taking that can start to chip away at this. And so what we're trying to encourage is, you know, 4 core issues, no one single path, but over the next 4 months, can we encourage dozens of ideas from the community to take on pieces of those issues? As we continue to refine, what are the things that will have the biggest impact? How can we start to create the right interventions that'll reverse sort of the long-term downward trend? But how can we start getting a critical mass of people to start saying, you know what, I'll take on a piece of that. We've been very heartened in some of the prior meetings where we've had you know, people come up and say, you know, like I use the example of well, you know, given as what I've noticed with my neighbors moving in, and you know, we're just not involving this, you know, all this energy and talent moving in Wichita, and given that sometimes these people who move in end up being our biggest boosters, maybe we do things like, you know, re-envision what does welcome wagon mean today? You know, it's like, so it's good. Those are the kind of ideas we're starting to see come in. We want to see more of them, as many as possible. You know, and you know, either teaming up with people or figuring out how to start these things. You know, we were at a major employer this morning where afterwards one of the tables just stayed for significantly longer after the session, and they were thinking about all the things that they could do to improve what they're doing to attract talent, and they realized there's some things they're doing really well, and how can they share what they're learning with other organizations. And that's the kind of thing that we want to see spawn here, and we want to see ideas build. So, you know, for example, at one meeting I put on the table, there are a couple things outside the scope of our work. Just feeling as someone who still feels Wichitan in a way and owes Wichita, I was thinking there were a couple things I'd put on the table. Like, you know, I was thinking, you know, I know a lot of people who've gone on to build some really nice, grew up in Wichita, still have some fond memories like I do, went on to build some pretty significant businesses. You know, I'm willing to create like Wichita Homecoming. You know, I don't need anyone to fund that. I'll take care of that. But like, you know, bring some of these guys back to hook up with people here to see, are there people who are now positioned to be angels for good ideas, angel investors for good ideas here? A lot of us are limited partners in venture capital funds. Can we make contacts? Can we, are there people where we just meet and we just hit it off with, and we can serve as mentors? And then someone in the audience built on that and said, you know what, what might be really cool is if we, bring them to city leaders so they can talk frankly about how people view Wichita and what needs to be fixed, which is good because then it's people who can talk a lot more candidly. And so these ideas are starting to build that can be, can we have dozens of these things to build the critical mass in Wichita to say we're taking charge, we're taking responsibility. Like another thing I'm willing to do outside the scope of this is just as an example of not the solution, but things I would like to see. Lots of these ideas come up. Is I spend a lot of my time at this point identifying and cultivating young talent, and like I was thinking, I'd be willing to, as I realize some of the most incredible, talent that I've seen, emerging talent I've seen is still here in Wichita. But I'd love to see them get broader exposure to other things happening elsewhere in the country, elsewhere in the world. I'd be willing to get some guys together to fund sort of a fellowship for early stage or mid-career professionals on that we recognize them in a lot of the big cities as people who are really moving, that they too should be in that class, but how can we get them more exposure to what's happening elsewhere? I'd be willing to put something like that together. And the question is, how can we get lots of people saying, I'll tackle that piece, I'll do this, and can we get that momentum going? And so, how can we cultivate an environment that helps the community rally around highest potential ideas? How can we create an environment where it's okay just to throw out ideas? And some of them might not get off the ground, but the effort is encouraged and the learning is shared. Learning of successes, learning of failures, learning of why things didn't start, so we can build that intellectual capital on how do we get these kinds of things moving that end up contributing towards growing economies. And how can we create the expectation that it's up to the community to take charge rather than wait for circumstances to change, because waiting ain't going to make it change. That's sort of the challenge we want to put at this intermediate step. Closing thought, economic change has absolutely flattened a lot of mid-size, manufacturing-driven cities, particularly in the Midwestern U.S. But some of those have escaped that path. Now it's Wichita's time to decide if it's one to escape that path or not. And it's up to Wichita, it's up to a good handful of you guys in this room to say, is it time? And start coming up with ideas and start figuring out who to team up with and start getting some of this stuff done. The good news is early signs as this is our first day of this process of sharing the first round. We're seeing some pretty good ideas come up. We're seeing some people saying, okay, we're going to make some stuff happen. And we're just starting this process. So that's the ball we're trying to get rolling now.